Hey, what's going on, guys? Nick with MFX here. I'm starting this video. I ended up recording it today instead of last night when I said I would because I had more people that asked questions, and I was just sort of waiting for everyone to wake up here in the US, ask their questions so I could throw them in here. So I'm going to jump right into it without wasting any time. I'm going to try to make this as quickly as possible, but also concise. Okay. So first question I have is from Jim, and Jim says, I would like to ask if you could give some insight as to how to identify what the highs and lows of the day are. So right now I'm looking at an Australian dollar Japanese yen chart. And this is, let's just say this is a trading day. This is a 60-minute chart, so each candle is an hour. Let's say this is the high of the day and this is the low of the day. Now, how do you know this is going to be the high or low of the day? I don't know, and I don't really look at that. I look at support and resistance, what price does when price gets there to those significant support and resistance levels. And I look at Elliott waves, divergence, a couple other things. I piece the market together. I look at everything. I put it all together to make an educated decision as to where the market will go next. But if you're using highs and lows of the day, and you just want to sort of know how they work. It's just, the market will go and it'll make a certain price for that day, and then it'll pull away from that price, and that will be the highest price of the day, and it'll pull down all the way to a lower price, and then it'll go up from there, leaving what is known as the low of the day. So like I said, I don't know where these prices happen. I don't really look at them that much, but let's look at it in more of a macro perspective, a bigger picture. This is the high. This is the high of the day on Friday. Let's see what this is. I'm just going to draw a line right in here, and we see that high of the day was made at what? A significant level. We have price reject right here. We also have price reject here and here, and it came down, had a little bit of rejection here, came up, cracked through this, came up and rejected it before falling lower. So this right here is a very significant level because we have price consistently interacting with that level. Well, guess what? When the market came up there and made its high of the day, it happened at that significant level. Same thing with this. Let's look at this in a macro perspective and see if we can find a level here out of this. So we're just pulling price all the way back to earlier in the month and last month. So you see price reversed here and here, had a little bit of rejection here. Here, this is like 3, 4, 5, 6, 7, 8, 9, 10, 11. So it had 10 prior areas where this level was tested with rejection, and then it came back on the 11th time. Guess what? That was the low of the day. Okay, so the high and lows of the day are going to happen at these significant levels. I teach how to mark up significant levels on charts. Watch my free videos if you want, the free training if you want to learn. But essentially, you go to a line chart and you look at where price closed at, and then you draw levels in there where price closed at. Okay, so hope that answers your question, Jim. We're going to move right along to the next question here. So let me see. I think I had one from someone else. Let's go here. Okay, we have another one ask a question. How do you draw the range whenever you're starting Elliott waves? Okay, so I'm going to show you that here. Let's go to a random chart. Let's go to Euro GBP. Let's see what we got here. I don't see any clear pattern here. Let me go to a different time frame, see if we can see something more clear. So I don't see anything clear here. Let's see if we can find something that happened maybe a while back. This looks just really choppy. I could see this right here. Okay, so here's what you do. You wait for the market to be going sideways. Okay, that's what you wait for first. You wait for the market to be going sideways. After you see the market going sideways, you can draw in sort of your little consolidation lines. And I'm not cherry picking here. I'm finding just an area where the market was going sideways. So then you can do something like that. Whoa. You can do something like this. Just connecting that range. This could also be the lower portion of an uptrend range. See, something like that. All you're doing is after you draw this little range, after you draw this price consolidation, you've sort of identified the tops and bottoms of that area, you wait for price to clearly break out of that area and then come back and clearly tap that area. Okay, so if we're looking at this, drawing this after this move happened and spiked up more, you would have known, okay, we had price clearly move out of this area and it came back and it tested somewhere in here before going up. If we're adjusting our trend line to reflect this a little bit better, you could connect the wicks, and if you connect the wicks, this price precisely touches where these wicks are. So this, drawing the trend line like that, makes the most sense. You could do the same thing on the bottom or whatever if it would have broken out to the bottom, like to the downside. But this right here makes the most sense. So as far as this goes, we're going to draw in our Elliott waves. So like I said, this is after we've drawn the range. So we have one. Whoa, I'm sorry. I forgot you have to, it's trading view. So you have to do 0 here with the range. The range is 0. You have a breakout and retest, that's 1 and 2. Then we have price move further up to waves 3 and 4. Then we have price move up even higher to wave 5. Before the market kind of played around here, chopped around before it ended up reversing, okay? Now, this is clear, right? 1 and 2. Everybody who's looking at this can say, yeah, it's a breakout and retest before it continued up higher. But what you'll have is you'll have some people say, okay, well then it made 3, then it made 4, and then it made 5, and then the divergence, and then it reversed. And then what's this? This is all chop. You have to look at it in a macro perspective. If you're just looking, if you're just zooming out, you want to see 3 pushes up by the market makers. Okay, you want to see 3 price pushes up. Now, like I said, Elliott waves don't always work, but for the most part, they work very surprisingly well. And what you're doing whenever you're seeing Elliott waves, you're just waiting on a pattern that looks like 3 pulses. Now there's technically 5 waves because they count these 2 pullbacks right here. But whenever you're looking at 3 pulses, let's try to identify this pattern that happens in the market all the time. We had the market going sideways in here. Then we had a pulse out of that range. That's the first time it pulsed out. Then we had a pullback. And then we have a second pulse down, and we had a pullback. And then a third pullback before we started getting divergence down in here, as you can see, all these peaks going up, and the market ended up turning around. And then when you see right here, let's zoom out and look at this from a bigger perspective. We had a sideways area here, then a pulse out. We had an impulse move, then it pulled back. Then we had a second impulse move before we had the market pull back. Then we had a third and final impulse move before the market ended up turning over. Now, like I said, this pattern doesn't always work out because look, we had an impulse move right here and then a pullback. 1, 2. Then we had another impulse move, 3, but then it came back and ended up screwing around. We didn't see another third impulse move downwards. That was clear enough. So that's why we wait for this clear pattern of 3 impulses in the initial direction of a trend. And if you want to make it, even more accurate, you just use the Elliott waves because the Elliott waves include the pullback. So you can see, here's my range. I see a pulse outward and a pullback, 1 and 2. A further pulse outward, 3 and 4. And then a pulse even higher to wave 5 before you see divergence. Okay, so if we're looking at this, yeah, these peaks were going up right here. These peaks were going down. This is divergent. We have a high, slightly higher high, or it's the same, or it's going up a little bit. Then we have a high and then a lower here. RSI is diverging from the main chart price, indicating bearish sentiment. The market is going to turn bearish. And as you see right here, after price played around for a long, stressful time, it ended up coming back down, okay? And this is a 5-minute chart. Remember, this is a 5-minute chart. You guys would have had a setup right here. Let's look, let's kind of analyze this and see what we would have looked at when we were looking in here. I'm just going to draw this up. I would have said this range makes the most sense right here. I'd say right in here. Price chopped the most in this area where we were not going up or down, we were going sideways. We went up here, down here, up here, down here before breaking out and retesting. Remember, you always want to see like a breakout and retest. Price played around up in here. If you really want to be fancy, you can draw the peaks like that. But what matters the most is where price breaks out and retests up. The top, yeah, it's a channel, it's a range. You see where price reversed at, where it makes the most sense. But this doesn't matter as much. We're just looking for the level that price broke out at. As we can see, this is a very clearly defined support resistance area. The market went sideways above this area before breaking out, testing here and pulling down, but then it pulled back in, broke out again, came up and tested this area with strong rejection before falling. So this little move right here, if I'm looking at the big picture, I'm going to say this is our range and our break and retest came here. Now, yeah, it happened over a series of candles, right? It happened over a series of candles and scraggly moves and stuff like that. But if you're just looking at the big picture, you see the market is sideways here, clearly breaks this level before coming up and retesting, trying to get back into this range and then falling. So if you're looking at this in terms of Elliott waves, here's our range right here. Here's our breakout and our retest. Here's our further move down to wave 3, our clear pullback, and then our 5th and final pulse before we started seeing divergence down in here. See, lower lows, market's going lower on this chart, market's going upwards on this chart. And then what do you know? The market cracked out of this area, tested it before pulling up. Okay, this is on the 5-minute chart, guys. This happens all the time across all currency pairs, all time frames. That's why we're so profitable here at Mission FX, is because looking at all time frames, I mean, I look at the daily chart, the H4, all the way down here to the minute 5, and occasionally the minute 1, but I stick to primarily minute 5 and minute 15 for scalping. And you can do this with 1-to-1 risk rewards. Guys, you can do this, very, very, very simply. As long as you just follow these patterns and you understand what the market's doing, and you get the bigger bird's eye view perspective on it, so that you're not looking at just one indicator or one confirmation. You're putting everything together. You're putting a range, there's this Elliott wave, plus divergence, plus a break in retest, plus bullish price action, and you're just taking everything into context before going out. Like I said, I won't cover it all in this video, but I make a lot of those videos, like literally 90-95% of my training program for free on YouTube. So we had another guy named Jaron Johnson. Do you have a video that helps to see when the 1, 2, 3, 4, 5 wave starts and ends? Yes, Jaron, I have plenty of videos, and I just went over that again right in here. So hopefully that helps you out. So let's see what else we got. Another question about the range. Daryl says, hey man, I'm having trouble identifying the range. Can you help me with that? So like I said, whenever you're looking at that range, just do a clearly defined break and retest. This is a clearly defined break. This is sort of a retest, but this is not clear enough for me. I like to see it clearly come out of the range, come back and test before getting strong rejection and continuing up. This right here is not clear enough for me. You see we have a pulse down, a slight pullback, a second pulse pullback, and a third and final pulse before forming divergence down in here. But this isn't clear enough for me. I would not have taken a trade there. Let's see if we can see something. This is something we could look at. I'm just going through examples here. We have a range right there where price has sort of been in like a wedge or going sideways or whatever. You see it's kind of chopping around in this before it gets out of that area. It comes back and tests it before continuing up. So guess what? If we're looking at this, looking at our range, 1, 2, breakout and retest, 3, 4, further push and then a pullback, and then 5 before divergence. This looks like it didn't have any divergence. We had price try to run up and make a higher high that was divergence, but didn't look like it pulled back. So, but still, you see it's like wave 5, then it reverses and comes down in another set of waves. See, one pulse here, second pulse, a pullback, and then a third pulse before it comes back. And like I said, this isn't clear enough for me, but if you're looking at it in terms of Elliott waves, you have like your little price chop right in here, your sideways range, your peak, and then you have, this is your range, 1, 2, 3, 4, 5, and then this right here, these peaks are going down, these peaks are going up, so this was divergence. Again, I teach this in complete detail on 3 videos, videos 6, 7, and 8 on my free training program on my website, www.missionfx.us. Okay, so you can learn that all there on the website, but here I'm just teaching you, just going over it again to sort of solidify that. But guys, this is a pattern that works all the time. It just works so well, and like you have everything you need right here that I teach it for free. So I hope this helps out. Those were my main questions I got asked. I had one last one I want to go through. Let's see. Okay, where do you put your stop loss at? I go over this video. I go over this question. I cover it in my first video on this training on my website again. So I already gave you guys that information, but I'll go over that again real quick. Let's find like a pattern. Let's find like a clear pattern. Oh, I don't see anything here. I see 1, 2, 3, 4, but no 5 here. You get to the point where you guys can literally open up a chart on any time frame and know within like a few seconds whether or not there's a setup. Let me see if I can find something. Let's this looks like a clear, somewhat not a clear retest though. Let me go over this though. This looks pretty cool because this can help you use discretion so that you're not just focusing on being so absolutely strict with I have to see this and this happen. As long as you get a feel for what the market's doing. So let's just try to get a feel. We had a range right here, clearly defined range, a breakout and then a pullback, not necessarily a retest of this area, but a breakout and a pullback so that we can see this is clearly a pulse up and then a pullback. So this is our first pulse up, pullback, our second pulse up. This is a high, but it's not high enough for me to count that. And also, whenever it makes its pullback, it like closes back over this area here. We don't want our price to come back into our previous wave. We want it to just test the top of our waves before going up. That looks like it happened right here. So I would not consider this 3 or this. I would consider this 3 because it's clearly a continuation of the initial breakout. We had the initial breakout, pullback, then a continuation of that move, and then a pullback right here, which is good because this area right here kind of tests that previous area, and it can happen higher. It doesn't have to come all the way back, but this is a really, it's a better way to look at Elliott waves. It'll test the previous peak before going higher. And then we have wave 5 up here before the divergence right here was formed with these two peaks going up and then these peaks barely going down, but it was divergent. This is a higher high stretching out on the main chart. This was a lower high. These peaks were flat. So you can see the RSI is diverging from the main chart price. So here's how you enter. After you see a divergence like this, you can take the trade right there at the divergence, which if I'm scalping, I'll do that. I'll take this move because I know we've already broken out of a range in 5 waves. We already have divergence. We're already overextended. This is a very high price. A lot of people who got in down here are going to be taking their profits. And so you could have entered a sell up here as soon as that happened. Also, if you're combining technical analysis, it looks like this right here was another significant level. If we can see, price consistently reverses at that area here, 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 sort of in the past. So that would have been an area a lot of people who were in buy orders were taking profits out, was right here. So, that's just an extra confirmation. Okay, it's a good place to probably sell at. Even if it would have happened, it would have had to come to at least up here, just make a higher high to show the divergence. So you can sell right there. If you don't sell right there, wait to start seeing bearish wicks. If I didn't sell right there and I saw this candle come all the way back down in here, I would have entered right here. Okay, so when you enter right there at that level, you want to take 50% of the previous move. So let's just say our entry is right. Let's do the percentage right. Here was the very bottom of our whole impulse move up in 5 waves. So let's just take Fibonacci, this peak right here, and I teach this all in the videos. You go up to the very tip top, okay, and you just look for the 50. So the 50% mark of the move was right here, okay? So that's the 50% mark. So I'm just going to take a little line just so we know where our profit target is. I'm going to put that line right there, okay? And then I'm going to take the Fibonacci off so we can see it better. I took off the Elliott waves because we already know this is like a little 5-wave move with wave 5 and a divergent peak. So this is our profit target. So if we enter right here, our profit target's right there. We want to do no more than a 1-to-1 risk reward for scalping. If you're doing different types of trades like I teach in the videos, then you can wait and you can hold trades longer. But typically for scalping, you don't want to be risking a lot. So this right here, you would have been going for, it looks like 6 pips. So grand total 6 pips. Looks like the market was insanely slow right here. So if the market's slow, I would not have been trading at that time. Either way, if you're going to be going for 6 pips, let's give them the benefit of the doubt. Let's go for 6 pips. You're only going to be risking 6 pips, okay? So 1-to-1. As you can see here, if you're on a higher time frame, then you'll be getting more pips, like 50 to 100 pips for moves like these on a very volatile pair like GJ or UJ or Euro USD. But this right here, essentially, you're risking 6 pips to go for 6 pips. The market, if it's made its reversal and it's going to come back, it's not going to play with you anymore. It's not going to go test your stop or anything. It's going to go straight to the target. As you can see, it did, right? You see it, and you would have entered right here at the close of this candle if you got in late, and then you would have taken your profit down in here at this level, which was 50% of the previous move, only risking 6 pips. It went straight there, didn't go play around with the stop. If you would have entered at the top here, or at the very top, what you can do is you still do a 1-to-1 risk reward, but you can take your profits at the previous high. So the previous high, the previous little level was right here. This level, or this level you could say, and you put your stop as a 1-to-1 type thing. So let's just loosen the stop up. So essentially you're risking 8 pips to go for 8, or something like that, 8.8 pips, or whatever, to go for 8 pips. So that way you're not going to get stopped out on the stupid move. If you've done your analysis correctly and it's already 5 waves and it's already overstretched, this move is going to be very, very easy to see, and you're going to have great risk to reward ratios. Great meaning for scalping, 1-to-1 is a very good risk reward ratio. And things are going to be real simple. You'll be able to make a lot of profits just with that simple strategy. So that being said, guys, I hope all of you have gone through the free trading. If you haven't, I highly recommend you do that just because it's literally free and it's there for you to take advantage of. Okay, remember, this used to be my paid training program. So if you go through my free training program, please take it seriously. Do not be an idiot. Do not go through it and then sort of look at stuff here and there and then ask a bazillion questions without having gone through all the videos and taken notes and then put it into practice before you ask me a question, okay? So that being said, I think we had 4 student spots open for Mission FX this week. I've closed 2 of them. I had 2 people already start, and I've got 2 spots left as of today, Sunday, June 10th, 2018. If you're interested in being a part of the clients group, you get 3 things. First thing, access to the students group where we trade live every single day. Me and the rest of the clients, there's like 75, 80 people in there right now. Second thing you get is you get access to the advanced training portion of the website where I sort of go into more detail of all this stuff and break down psychology, timing, stuff like that. And the third thing you get is you get 1 week of personal mentorship from me so that while you're going through the training, while you're learning the new stuff, you have me to talk to one-on-one there for an entire week as much as you need to make sure that you're understanding things crystal clear. So the people who have taken my program and take it seriously, they see results. They see consistent results and people consistently make money. But you got to be committed to it. You have to be serious, okay? So that being said, I'm going to end this right here. Hope you guys learned something new. Shoot me a message. Ask me any questions on any social media platform, however you want to get in touch with me. And when I see your message, I'll get back to you, okay? So you guys have a great trading week this week, and I'll be continuing to release videos and setups and analysis and stuff like that. I'll see you guys. Bye.